haven't been any significant changes in the positioning of the trust over the last quarter or so. India remains our largest market at about 16% of the portfolio. What has seen a bit of an increase is our China and Hong Kong positions, which are now sort of equivalent at about 16% on a combined basis. And that's really driven by the strong performance of the Chinese market, given the very sharp U-turn in policy by the government there in terms of opening up the economy and removing the very draconian zero COVID restrictions that were in place for the most part of the last year. Outside of that, we have decent allocation to Indonesia and Taiwan at about 10% of the portfolio each, and quite a few Southeast Asian countries at about 5 to 7% of the portfolio, including Vietnam. From a sector perspective, we are still very exposed to domestic demand growth in Asia, be that through consumer staples, financials, healthcare, tech, a really good spread of industries there. And the key theme of the portfolio is capturing that domestic growth in Asia with a bias towards quality companies. And you see that quality characteristic via higher profitability and lower debt levels. And that has been a consistent feature of the portfolio throughout time, really. (2022) was a pretty difficult period for markets, and Asian markets really bottomed in mid-October. And since then, we have seen a pickup, primarily driven by that reopening in China that we talked about, and a little bit more positivity around interest rate hiking cycle and peak inflation. For the trust, the NAV fell 0.9% in the fourth quarter. This took the calendar year performance down 8%, which was a little bit better than our closest benchmark, the MSCI Asia ex-Japan Small Cap Index, which fell 9% during the full calendar year. In terms of the recovery in the fourth quarter, you actually seen that spill over into 2023, with January, the NAV of the trust up by 4%, which was in line with our reference benchmark. Looking strictly at the fourth quarter, what you did see in the portfolio was good performance from our Chinese holdings, our Thai holdings, and our Korean holdings. Those markets have been pretty beaten up, and Thailand in particular benefits from a reopening in China, given increased mobility, and that market does drive increased tourism in Thailand, which is a big portion of GDP there, about 20%. The Korean market was also extremely beaten up, and what you have started to see in the fourth quarter and into 2023 is a rotation out of some of the Southeast Asian markets into North Asia. And actually you did see weakness in markets like India and Indonesia. At the stock level, we did see some weakness from our Singapore holdings, particularly those more exposed to cyclical elements of the semiconductor supply chain, which are still seeing some weakness. And we also saw some weakness from in our Vietnam exposure, which is an off-benchmark exposure, and where you're seeing some political upheaval and a crackdown in the property market. Although we still remain extremely bullish on Vietnam, taking a longer-term view and very comfortable with our holdings there. We didn't introduce any new stocks or exit any companies from the portfolio in the fourth quarter of 2022, but we did move things around. Primarily, we reduced a couple of Indonesian holdings, which have done very well for us, a hospital chain called Medica Loka Hemina, and a fuel distributor called AKR. As I mentioned at the start, Indonesia has been a very strong market and is a decent proportion of the portfolio, around 10%. So we took the opportunity to raise some cash from those holdings. Similarly, we took some profits from a company called Apple Holdings in India, which is a digital advertising business, which has done phenomenally well for us since initiation, but is a decent-sized position in the portfolio and a company that has re-rated a fair bit. So we did decide to, again, fund some of our top-ups with slicing back Apple. On the flip side, in September, we had initiated a couple of Chinese holdings to the portfolio. And so in October, we continued to build our position in Kerry Logistics, which is a logistics powerhouse in Asia, and one that has recently been acquired by the equivalent of DHL in China, a company called SF Group. And we believe that company is extremely well managed has a very strong position in the Asian market and will continue to benefit from intra-regional Asian trade in both China and the rest of the region. Outside of that, we added to a couple of Korean holdings, a company called Ko-Young Technology and Lino, both that were attractively valued in our view, given the pullback in the Korean market. And we also added to a Malaysian company called Pentamaster International and our single Sri Lankan holding, John Keel's, again, due to pretty attractive valuations. Yes, I'll bring one holding to life, which is a company called Park Systems in Korea. It's currently the largest holding in the portfolio with a weight approaching 4%. And despite the company doing very well for us, it's up threefold since we initiated a few years ago. It's still a very small business from a market cap point of view at $700 million market cap. And what we like about it is that it's really creating a new industry and growing from a very low base with a marquee client base. So the company is a founder-led business, a gentleman called Mr. Park, who studied at Stanford with a physics Nobel Prize winner in developing a technology called atomic force microscopy, which is really very powerful microscopes. And he took that technology to Korea and transferred that technology from what was primarily an academic research ecosystem to industrial applications. And he's already got some of the largest semiconductor companies in Asia and globally as clients, and the industry is really just growing from nothing. The company has a very profitable business model, leading technology, a strong balance sheet, and therefore we think that it's exactly the type of business that you want to have exposure to by investing in a company like Asia Focus, where you're tapping into small businesses that are leading players in their field, that have a very long runway for growth. The Asia Focus Investment Trust is a concentrated portfolio of about 60 holdings, which really capture a range of industries across Asia and across, several of the Asian markets. We capture several themes through the portfolio, but I would really want to stress the fact that as a small cap portfolio, we're really trying to tap into domestic growth in Asia. Asia remains the powerhouse of global growth, contributing well in excess of 50% of global GDP. And we believe that a lot of the companies in the portfolio are more driven by micro factors rather than macro factors, which we think is attractive in this environment of extreme volatility in macro and global forces and geopolitics. So that's really a key theme that we're capturing with Asia Focus in tapping into domestic demand, be it through consumer staples, financials, tech, or healthcare stocks.